Hi there. So, in the recent time, the tariff has caused a major turmoil in the stock market, and it is definitely going to impact the entire global markets in the coming days. And that's why it is very important to understand these macroeconomic concepts and then derive your conclusion and accordingly adjust your positions based upon how the markets are responding. Now, this requires you to have research at multiple levels. You will need to develop your foundational knowledge because when I started doing this, I did not have any knowledge about US bond markets, how the interest rates are impacting. So there's one foundation level of knowledge that is required. And then you move to the next level wherein you should be able to derive conclusions, and these conclusions cannot be based upon these days. There are hundreds of sources, but ideally you would like to base your conclusions. One is from your own research, and then as you become more familiar with it, you start developing reliable sources. You want to be able to query a set of documents in a very organized manner and derive your conclusions, and then be able to track the markets. So all of this is possible using different tools from AI. One tool doesn't fit in. At least for me, what I felt was there is a different tool for foundation knowledge, there's a different tool for you to organize your own knowledge and then track the market, and that's what we cover. The first thing that I used was primarily Perplexity to get started. And what I started with was a very basic question that, like, because it's all been about US debt and about treasury bonds. Then I started with a very basic question that how much debt has US government taken in last 5 years and how much does it need to repay? Just want to get a sense of how this is moving. And Perplexity over here does an amazing job of pulling up the latest information and collating it and helping you understand and precisely answer the question. And that's exactly what happened. Gave me a very good perspective that yes, the debt is going at an alarming rate of approximately in 5 or 6 years. It's almost increased by 35%. And it also gave me an understanding that what are the red signals. So over here it indicated that the debt to GDP ratio is 121%, but it is well above the threshold. But if you compare it across the different types of economy, then it's still not like the worst ratio that you can see, which is slightly different in case of other countries wherein it is also up to 200%, but some of them are definitely way under control in terms of the interest versus the GDP ratio. But another interesting point that it brought up was that it has to approximately use $726 billion to only service its interest, which is a significant amount, and now it is continuously increasing. So this is as of July 23. That is about 14% of total federal spending. So like that, it answered my very foundational question very well, and then it also gave me, you know, ability to question it further and build on that. So it always tells you that this is the next question that you can ask. And I started further trying to understand the numbers, and I not only tried understanding the numbers from US perspective, then I took the entire aca- studying this process to the next level, wherein I also tried understanding how is the Chinese economy and the Japanese economy doing, and especially how are they treating the bonds. So in this case, what my observation was that the China has reduced its dependency on the treasury bonds. Japan is continuously reducing it. And what it also gave me an understanding is how much of the total manufacturing is owned by Chinese companies and how much of it is owned by the US companies. So it gave me all that information, and it also helped me bring in more and more questions that I can ask to understand this better. So this gave me a very good foundational knowledge. And what I could conclude based upon this is primarily this, that the debt to GDP ratio for US is 121.57%, which is definitely above the threshold of 80% from the way the World Bank defines it. And the key point is that the total debt is today at 36.56, which is increased by 13 trillion over 5 years. And the primary part of it being that every year as this debt increases, the servicing cost for this debt is also going to increase. And the overall other aspect that is not captured in this slide is that how was US sponsoring its debt? That one is it will raise the debt in the domestic market, and the other is it will raise it in the international market. But if the two of its biggest proponents of US dollar, that is China and Japan, they're starting to reduce, that means they cannot sell in international market. So if they are actually raising more debt, they have to go to the local markets. It gave me a very good foundational knowledge, and it also helped me understand that total manufacturing share that USA today owns 15% and China is owning 30%. But the other part of the fact is also that US is consuming also a lot more than China. So this all these details started coming out, and for me what I finally concluded is that it is all about being able to raise the bonds, the money in the short term, and they want to be able to sell or somehow bring in the capital. That is why tariff. And the other part of the story is obviously very clear that US wants to start manufacturing again, and they want to promote their own companies. So that kind of gave me a conclusion. But the key point being that if you are not aware of the concepts, then you can start with something like Perplexity. It gives you 3 queries every day. It also helped me understand that which currencies, which recent geopolitical situation, that is the one that I have highlighted at this point in time, that which geopolitical situations resulted in lack of trust for US dollar at this point in time. We really look at it in the last 5 6 years. Venezuela assets, Russia assets, Afghanistan assets, and of course the Iran assets have all been locked in response to a situation which is a geopolitical one. So it obviously gets merged, and that is why China and Japan wants to take lesser dependency on US assets at this point in time. So that is how you can use Perplexity, and it really helped me understand that. But the second part becomes very interesting. Okay, this is what you understand about the macroeconomic situation. Now, what do you do? So it gave me all these answers, and it also gave me the sources. And the next thing that I did was, because you have to move from a very large plethora of information to a more narrow organized pieces of information, and that's where the notebook LM fits in. Notebook LM is from Google. You can go and just sign up for this, and then you can add your sources over here. Like over here, what I did was I not only read these documents, but I also watched a few of the YouTube videos which appealed to me, and then I organized all these sources over here, and then it allows me to question based upon whatever is covered in these documents. It's not going to have a point of view which is beyond these documents. So I am organizing my research. And the most important feature that I found in this was at two levels. One was the fact that, you can generate a podcast out of this. And then there are two people discussing this, and it kind of summarizes all your documents in a kind of a podcast. And you can ask it a question using the interactive mode, which has been recently launched. And the other part which I really genuinely liked a lot was this part of it, which allows me to see the outcome of these documents in a kind of a mind map. So if I can go back to this. So over here it organized everything that I had, and it is kind of telling me Trump. That's how it is organized the content. And then it is trying to tell me in context of India, this is where we stand. And minded, this is slightly dated by the time you will be watching it, or this will be put, that US tariffs on India is approximately 26% discounted reciprocal tariff. And like that, it gives me different aspects: impact on US economy, the way these documents are trying to bring up that there is a stock market, going to be a stock market decline, uncertainty for business and investment. And then I can use this to start questioning it back. So if I just look at it, my final thing that I wanted to conclude in context of the stock market was that which sectors in context of India would be positively impacted and which ones would be negatively impacted, because that's what you want to know. Fair enough, this is all the history This is how the macroeconomic situation is. This is how the geopolitical situation is. But finally, if you have to make investments, then the next level of question that you have to understand is that while there is uncertainty, and if you have to make some bets, then which are the bets that you would like to make and which are the bets you would like to avoid. So these are the sectors that it gave me, that these are the potentially worse off because of the tariff adjustments, that is auto components, jewelry, apparel, chemicals, and it'll have reasons for each one of them, and then potential for growth as electronics and textiles. Now if I want to question it further, I can just put it over here, and it will try to bring in more information on these sectors and why it is proclaiming that yes, this is going to be better one. So that's the second part of the puzzle, that you have questioned, build your foundational knowledge, and then you are going trying to further analyze it based upon what your trends are. So primarily, if you look at it in context of notebook LM, the primary thing being that there is a 26% discounted reciprocal tariff, and since this is not absolutely like up to date and you have to do that manually, and the sectors which will work better are electronics and textile, it has given me that information, and it has also given me ability to question it further if I want to understand any one of these things better based on the documents that I have organized. So this helps you further channelize your research. Now, once you have done this research, obviously the global markets are changing, that there is impact, and you might want to not just track Indian market, you want to track how Indian market is doing in context of other markets, and if you're wanting to take bets against other markets, then how do you bring in that? So maybe you want to invest in today Turkey, or you want to invest in some other country which is doing extremely well and their currency is also doing well, and that's where the third tool that fits in is for us is the one that I brought up in between. This is Google Sheets, and you can leverage Google Sheet to understand how the index are responding to different events, and how their currency is doing. So over here, as you can see, what I've done is, and these templates would be available and the links would be available, that the Turkey, it went down and its currency has depleted against the dollar. So what we have done over here is a very simple template which tells you a 30-day kind of a trend for a particular stock market, and in this we have brought in different stock markets and how is the currency performing. So if you really look at it, at least from an India perspective, we're doing very well for that matter. The currency has appreciated significantly, and the markets have gone above the what it was like 30 days back. So it is definitely an uptrend, whereas the other uptrends are not that solid. You can see how each trend is moving. Now, obviously, this is a 30-day trend, but if you wish to actually reorganize it for a 60-day trend, or exactly from where and different news happened, that also you can do. So, in summary, what we are saying is that the Indian markets have recovered well, and another market that I saw using this was Australian market and Australian dollar. Now, these are three different tools, if you really look at it, that we saw over here. You can think of Perplexity as something which helps you develop your foundational knowledge, and you can start with one single question and then build on it. And that's the beauty of it, that it is helping you build on top of it. So that's perfect with Perplexity. The second thing I would say is the Google Notebook LM, that once you have gotten an understanding of what's going on and you have built the repository of sources that you trust based upon your research on Perplexity, you can feed them into Google Notebook LM and then build your own knowledge or your own conclusions. And there are different formats also available, that you have a format which is a mind map kind of a thing. And once you've done these two and you want to track markets across, the Google Sheets fits in. So what is important is that you understand these macroeconomic concepts. There are tools available. You don't need to do all the reading, but you need to have the right questions, and then you need to organize it. And you can use these tools like this, and it will help you genuinely understand the markets better. And if you're tracking it using Google Sheet or something, you will be able to respond to the trends a lot better. So this was a very, my own research. I haven't tried doing too much on what my summary is, but my this thing is outcome is that yes, the markets will remain volatile. There's certain sectors in which you can bet, and at the same time you can also take bets in international markets a little bit if you're doing all of this research. But this is a good way to track. I wanted to share it. I hope to see you in the next one. Bye for now.